Welcome to the Deep Dive. Today, we're really jumping into Forex trading in Kenya.
Yeah, it's a hot topic. We're using insights from that Money Talks Forex in Kenya podcast. You know, the one with Alex and Tasha.
Exactly. Our goal here is to kind of sift through the hype, understand why it's so popular, and pull out some real practical advice for anyone listening who might be curious.
Absolutely. It's fascinating how this huge global market is like finding its own flavor in Kenya. That podcast really gives a good ground level view.
Okay, so let's start basic. For anyone who's maybe heard the term but isn't totally sure, what is Forex exactly?
Right. So Forex is short for foreign exchange. And it's massive. The biggest financial market in the world. We're talking over $7 trillion traded daily.
7 trillion?
Yeah.
No.
And the basic idea, you're trying to profit from how the price changes between two currencies, like will the US dollar go up against the Kenyan shilling, or maybe the euro versus the pound. That's the core concept.
Yeah. Okay, got it. Trading currency movements. So why the big buzz in Kenya right now? Especially among, younger people.
Well, the podcast pointed to a few things. Flexibility is a big one. The idea you can trade around your own schedule, that's appealing.
Sure. Beats a rigid 9 to 5 for some.
Definitely. And then there's accessibility. Mobile apps have made it way easier to get involved than, say, traditional stock trading might have been.
Right. Everyone's got a smartphone.
Exactly. Plus, the potential, or at least the perceived potential for extra income, or even making it a full-time thing, that's a huge draw.
And you can't ignore the social media factor, right? TikTok, Instagram.
Oh, absolutely. You see these lifestyles, these promises. It looks very glamorous online. And in an economy where finding stable work can be tough, Forex looks like maybe a path to controlling your own income, even with the risks.
Yeah, that online picture can be very glossy.
Yeah.
But Tasha on the podcast, she kind of brought things back down to earth, didn't she?
She really did. Stress that it's absolutely not a get-rich-quick scheme. It's a skill, something you have to learn, practice, and understand. It takes work, and there are real risks involved. It's not just luck.
Okay, crucial reality check.
Yeah.
So if someone in Kenya is serious and they want to learn properly, what's the starting point? The podcast had a clear path.
It did. And step one, totally non-negotiable according to them, is education. You just can't go into this blind.
Right. Learn before you earn, basically. What kind of knowledge did they say is essential?
Okay, so several key things. First, you need to grasp what actually moves currency prices. Think big news events, inflation numbers, interest rate changes. All that economic stuff matters.
Maybe the fundamentals.
Exactly. Then there's a specific language of Forex, pips, lots, spreads, leverage. You have to understand what these terms mean. They're the building blocks.
Right, the jargon.
And finally, you need to learn how to actually analyze the market. There's technical analysis like reading charts, looking for patterns in past prices.
Look at the history on the screen.
Yeah. And then fundamental analysis that's more about understanding the economic health behind the currency, inflation reports, political news, that kind of thing.
Sounds like a decent amount to learn. Did they suggest any good places for Kenyans to get this education?
They did mention babypix.com, said it's free, good for beginners. Also suggested looking for reputable YouTube channels, maybe ones run by African traders who understand the context.
That makes sense. What about local courses or academies?
They added a note of caution there, said you really need to check them out thoroughly, verify their credibility, don't just jump into the first one you see advertised.
Good advice.
Yeah.
Due diligence is key.
Yeah.
Okay, so education first. What comes after you've got some theory under your belt?
Practice. But, crucially, practice without risking your own cash. That's where demo accounts come in.
Okay. The simulator mode, how do those work?
Yeah, basically. Lots of brokers, they mentioned Exness, Hot Forex, XM as examples, offer these accounts. You get virtual money to trade with.
So you can try things out.
Exactly. You can place trades, test strategies, see what works, what doesn't, make mistakes. It's all simulated. It builds confidence and familiarity before you put real money on the line.
Makes perfect sense. Learn the mechanics safely. So once you're feeling a bit more confident from the demo trading, what's next? Choosing a broker.
Yes, picking the right broker is absolutely critical. They're your gateway to the actual market. You need someone trustworthy.
What should people in Kenya look for when choosing? What are the key criteria?
Number one, regulation. Is the broker regulated? Ideally by the CMA here in Kenya, or at least a well-respected international body. That offers some protection.
Okay, regulation is top. What else?
Practical stuff. Can you easily deposit and withdraw money using Kenyan methods,
Yeah.
like M-Pesa or local bank transfers? That's important.
Yeah, definitely don't want hassles getting your money in or out.
Right. And then look at things like spreads. That's basically their commission. You want it to be competitive. And decent customer support in case you run into issues.
Did the podcast mention any specific brokers popular in Kenya?
They listed a few, yeah. Exness, FXPesa, and they noted FXPesa is CMA-regulated Pepperstone and HFM, which used to be Hot Forex.
Okay. Any final warnings on picking a broker?
Just to really read the fine print, understand the terms around leverage. It can magnify gains, but also losses significantly, and know the exact process and conditions for withdrawals. Don't get caught out by hidden fees or tricky clauses.
Got it. Read everything carefully. So we've covered education, demo practice, choosing a broker. What about the day-to-day tools a trader needs?
Right, the practical kit. Well, software-wise, MetaTrader 4 and MetaTrader 5, MT4 and MT5 are pretty much the industry standard platforms, and that's where you'll likely be doing your trading and analysis.
Okay, MT4, MT5. What about information sources? Keeping up with the news.
Yeah, crucial. An economic calendar is essential. Something like Forex Factory provides one. It tells you when important data releases or events are happening, things that can really move the market.
So you know when volatility might spike.
Exactly. And for deeper chart analysis, platforms like TradingView or ChartEQ offer more advanced tools than the basic broker platform might have.
Makes sense. Anything else? Like physical stuff?
Well, the obvious. A reliable internet connection. Can't trade if you keep dropping out.
Oh, true.
And especially in Kenya, maybe a power backup. You don't want a power cut right in the middle of an important trade.
Oh, good point. Very practical.
And finally, they recommended keeping a trading journal, like a notebook or spreadsheet where you log every trade, why you took it, what happened. It's incredibly valuable for learning from your own experience.
That seems really smart. Okay, so we have the knowledge, the practice, the broker, the tools. But the podcast also talked a lot about mindset, didn't it? The psychological side.
Oh, hugely. They really hammered this point home. Success in Forex, maybe surprisingly, often comes down more to your mindset than just pure technical skill or knowledge.
Interesting. So what kind of mental game do you need?
Well, a big one is focusing on the process, not just the immediate profit or loss. Stick to your strategy. Have a clear trading plan and follow it.
Instead of chasing wins.
Exactly. And manage your risk. They gave that specific rule. Never risk more than, say, 1 or 2% of your capital on a single trade. That protects you from big wipeouts.
That sounds like crucial discipline.
It is, and accepting that losses will happen. It's part of trading. You can't win every time. The key is learning from them, and crucially, keeping emotions out of it. Don't trade when you're angry, scared, or overly excited. That's just gambling.
Right. Emotion clouds judgment. Wasn't there a quote about discipline?
Yes. Tasha said, discipline beats excitement every time in Forex. That really nails it. Calm, methodical, sticking to the plan.
Okay. Now, given Forex's rise in Kenya, there's also a dark side. Scams. The podcast addressed this too.
Yeah, unfortunately, where there's potential money, there are often scammers. They made it clear this is a real issue in the Kenyan Forex scene that people need to be super careful about.
What kinds of scams should people be looking out for specifically?
They mentioned a few common types, things like Ponzi schemes, pretending to be investment groups, people selling signals trade recommendations with promises of guaranteed huge profits, which is just unrealistic.
Right. Guarantees are a huge red flag in trading.
Absolutely.
Yeah.
Also, be wary of managed accounts where you give someone your money to trade, but there's no transparency, no real accountability. Very risky.
So how can someone protect themselves? What's the advice?
Trust your gut. If it sounds too good to be true, it almost certainly is. Be very skeptical of those unrealistic promises.
And look beyond the flashiness.
Definitely. They pointed out that real traders usually talk about losses too. It's part of the journey. Scammers often only show off supposed wins and luxury items.
Good point.
And a practical tip they gave, if someone's flashing wealth on Instagram but can't explain a basic Forex term like what a pip is, run away.
Huh. Okay, that's a useful litmus test. So let's say someone does their homework, practices, avoids scams, feels ready. How do they actually start trading with real money?
The advice was clear. Start small. Transition from demo to live trading with a small amount of capital you can afford to lose. Don't suddenly throw your life savings in.
Ease into it gradually.
Exactly. Apply what you learned in demo, but with minimal initial risk. And stick to whatever trading strategy you developed and tested, whether it's scalping, swing trading, day trading. Consistency is key. Don't keep chopping and changing.
And keep learning, right? That journal idea comes back in.
Absolutely. Record every trade. Review them. What went right? What went wrong? Why? That's how you improve over time. Continuous learning is vital in Forex.
What about joining communities, other traders?
Can be useful for learning, yeah, sharing ideas, but they added a caution. Be wary of hype in groups. Don't get sucked into unrealistic expectations or hot tips without doing your own analysis. Stay grounded.
Makes sense. And having clear goals. Is that important?
Very. Why are you trading Forex? Is it for side income? To eventually replace your job? Long-term investment growth? Knowing your goal helps you define your strategy, your risk tolerance, everything.
Keeps you focused. And finally, how do you make this sustainable? How do you keep going long-term in Kenya?
Some key practices they mentioned. 1, regularly withdraw some profits. Don't just let it all ride indefinitely. Secure some gains.
Pay yourself, essentially.
Right. 2, don't trade when you're stressed, upset, or overly emotional. Step away. Protect your capital and your mental state.
Good life advice, generally.
True. And 3, keep investing in your education. The market changes. You need to keep learning, keep adapting your skills.
They used an analogy, didn't they, about farming?
Yeah, they liken Forex trading to farming. It takes patience. You need the right tools, knowledge, strategy, and you have to give it time to grow. You don't plant a seed today and expect a full harvest tomorrow.
I like that. Manages expectations. Okay, so wrapping up this deep dive based on Money Talks, what's the big picture for Forex in Kenya?
Well, the podcast frames it as a genuine opportunity, but only for those who are disciplined, willing to learn constantly, and approach it responsibly. It's not easy money.
And the risks are real, especially the scams.
Definitely. Vigilance is required.
So the core advice for anyone listening who's intrigued.
Go slow. Educate yourself thoroughly first. Start small if you decide to proceed. Build knowledge and experience carefully. Focus on responsible growth, not instant riches.
And if people want to check out the Source podcast itself.
Yeah, it was Money Talks Forex in Kenya, and they mentioned their social handle at Money Talks KE for more info or workshops.
Great. So a viable path, perhaps, but one that demands serious effort and caution. What was the final thought they left listeners with?
They finished with a call to action for Kenyans in finance. Stay smart, stay focused, stay winning. And they added the Kenyan flag and money emojis.
Perfect. A blend of optimism and the need for sharp strategy.
Exactly. Captures the Kenyan Forex landscape pretty well, I think.